It's no secret that COVID-19 has changed so much about life, the housing market being included. So we wanted to get an update today with our friend, Dan Primo, who is a loan officer with the Primo team at Meridian Bank. Dan, you said you're very busy right now, right?
Yes, absolutely. Very busy.
Busier than ever or just extra?
I would definitely say busier than ever. With interest rates being the way that they are, it's a great combination of purchase. People are still purchasing. It's a great market to buy in with the interest rates being so low. But people are also refinancing. It's an opportunity that if you have equity in your house and you have some debts, it's called a cash out refinance. You have some debts that you want to kind of consolidate that you may have been under for a while. It's an opportunity at a very low interest rate to combine those debts and kind of get rid of them, and in a lot of cases get one payment. It's an opportunity people are taking advantage of to get locked in at a lower payment, and they get to reduce the interest rate that they have. So it's kind of a win-win. And to even take it a step further, in a lot of cases they're shortening their term. So it's like a home run. So that's what's part of making it so extremely busy. Is these are the lowest rates I've seen in a very, very, very long time, if ever, and people are taking advantage of that.
Sure. However, though, with the interest rates being so low, that doesn't necessarily mean everybody should just run out and buy, right?
No, it doesn't. You have to keep your eye on the housing as a whole. You have to keep your eye on prices. We're seeing supply and demand taking a big effect in this market because stuff is selling so quick. It's no exaggeration to say stuff is selling in minutes and hours and days for sure. But you really have to keep an eye, even though the interest rates are really incredible. You have to keep an eye that you're paying where you should be for the house. We don't want a repeat of what we had before in regards to inflated prices. And if the market changes or anything crashes, that you've overpaid for a house and you're kind of stuck in that house.
Sure. Anything sellers need to be looking out for?
Not that I can think of. I mean, it's changed. COVID's changed it a little bit in how people are viewing a house. If you have some concerns as to strangers being in your house or anything like that, that's changed a little bit as far as whether or not the house is occupied. And timings and stuff. But besides that, not that I can think of as far as seller goes. Only that if they are selling their house and looking to move, they should probably have another house already lined up or picked out because their house will probably sell quickly.
Sure. So obviously, even kind of talking about this today, it's a very complicated process, but you and your team can walk folks through every step, right?
Yes, we still love to do first-time home buyers. That's kind of one of our favorites. Our team here loves to take people through the process as a whole. And we'll also do the same thing with the refinance. Let's figure out what debt should be paid off, or let's just figure out it's a great time, great opportunity that if you're in a 30-year mortgage and you've been in it for 6 or 7 years, let's look to see if you can go to a 20-year or 15-year and have around the same payment. And so it's multiple years of payments that you'll never make. So when we'll walk you through that process, we'll break it down and show it what it saves you from an interest standpoint. We can break down and show if you combine credit cards or you combine something else, what it saves you not having those minimum payments. We'll also go further back and we'll show if you've made a minimum payment on the credit cards and some of the other debt, how much interest you've paid. Do a comparison with if you combine it into your mortgage, because there's something hesitate. People as a whole, you can hesitate and go, well, I can pay this $6,000 worth of credit card debt off. Why am I going to put it into 20 years or 15 years? I think that's one of those things where we'll sit there and we'll look at the history and how long you've been paying on this particular account. And then we can say, okay, so you've been paying on it for X amount of years. This is how much ground you've made. This is what it's going to cost you if you continue in the same fashion versus if you do combine it into this extremely low interest rate and pull it from the equity of your house. So, and from every aspect, we'll walk you through it no matter what you want to do.
Well, we're thankful to have folks like you. Dan Primo with the Primo team at Meridian Bank. Thank you so much for joining us today. It was great to see you.
Oh, it's great to see you too. Thanks as always for having me.